Now, to be honest, there's a specific ETF that's relatively risky, but also yields around 30%, which offers a massive income generation from day one that I've been buying a lot more as of recent than I'd probably like to admit. Now, like I said, this ETF is relatively risky because of its complex strategy and its sort of all or nothing basket of holdings, but if the market plays nice, this ETF not only has capital appreciation potential, but also massive amounts of income to be earned for us investors. Now, the one thing I would say is that this ETF is relatively safe, at least based off of the track record. The ETF's total return is very, very shockingly good. So if you want to dig into this 30% yielding, sort of risky, sort of safe ETF with me, make sure to stick around, drop a link down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the ETF that I'm talking about, the somewhat safe but also somewhat risky 30% yielding ETF that I've been buying a lot more as of recently, is ticker symbol ZIVB, or the -1x short VIX midterm futures strategy ETF. Now, I came across this ETF a while back and I have talked about it here and there on my channel, but I really haven't dug super deep into it until today, which is exactly why I want to make this video. Now, if you guys are familiar with SVOL or ticker symbol SVOL, this ETF is somewhat similar to that, but also very different because this ETF offers monthly distributions, but this ETF is the -1x short VIX term future strategy ETF, which aims to provide daily investment results that correspond to the daily performance of the S&P 500 VIX midterm futures inverse daily index before fees and expenses. And if we go down to the volatility shares ETF's holdings, you can see that this ETF does exactly that. It shorts the volatility index, which makes up the majority of the top holdings. Now, what exactly is the volatility index? Some of you guys might be asking. Well, it says right here, the VIX is the ticker symbol for the popular name for the Chicago Board Options Exchange CBOE Volatility Index, a popular measure of the stock market's expectation of volatility based on the S&P 500's index options. Now, simply put, when there's more fear in the market, the volatility index or the VIX is going to shoot up very, very high. But as you can see, year to date so far, for the most part, the VIX has been pretty mild, which means an ETF like ZIVB would generally be pretty safe and be able to make some money because, of course, it's shorting the VIX. Now, when things happen like we saw back in August, when the VIX does spike up significantly, that's when ETFs like ZIVB or others that are, of course, shorting the volatility index could find themselves in some hot water. But even with this year's performance in the VIX, ZIVB's performance has not been bad whatsoever, which I'm going to show you here in a second. But before that, I also think it's important to note that if you personally do believe that the volatility index is going to be spiking significantly, then it might not be a good idea to invest into something that shorts the volatility index. But for me personally, I do think that we are going to see some volatility, maybe around election time, etc. But I seem to think that volatility is probably going to stay pretty low unless we have some sort of black swan event. So for that reason, I'm pretty bullish on shorting the VIX as of right now, which is also why I've been grabbing some more shares. Now, this is also super interesting in reference to ticker symbol ZIVB. I came across this today. It says the Board of Trustees and the Trust approved certain changes to the fund on September 20, 2024, effective on November 22nd, 2024. This change that the fund's name is going to go to ZVOL, or ticker symbol ZVOL, and is now going to be named the Volatility Premium Plus ETF, which, if I were to guess, means there's going to be some revised and some changes to the underlying holdings, etc. So that means that ticker symbol ZIVB will now be ZVOL, but for the most part, it seems more or less the same. It says right here, the index is designed to measure the daily performance of the inverse of the S&P VIX Midterm Futures Index, etc., etc. Now, to get into some of the fun part, I want to show you guys what I see in this ETF and why I've been buying some shares of it. Again, it's pretty risky if you ask me because of the underlying strategy, but it's also pretty safe if you look at the historical performance. This ETF, for an ETF that yields around 25 to 30%, has a very, very positive total return and has outperformed most ETFs you're going to stack up next to it. Now, on the 1 year time frame, this ETF is up around 8.2%. Year to date is actually down though 12.62%. So it has been in sort of a rough patch as of recently, probably because the volatility in the market has been a little bit higher over the last few months. But even still, an ETF that's yielding 30% or so, even if it drops 10%, you're still going to be net up on your gains. Now, the max time frame is much different, 33+% in the green. This is since around April 17th of last year. So it does check out, at least on the max time frame. It is in the green significantly. I mean, 33% for an ETF that pays massive distributions. That's pretty nice. Now, another elephant in the room is the 1.42% expense ratio. It's expensive to hold on to, but this ETF is, of course, actively managed and is pretty complicated. But here's the real impressive part. Since the beginning of this year, January 26th, the first ex-dividend date, this ETF has paid out 48.5 cents for every single share for every single month of ZIVB that you've held on to up until that point. Now keep in mind this ETF is just under $20 per share, so a 48-cent payout for every single share that you have. I mean, 2 shares in this ETF is paying you around $1 per month. Now the question is, are these payouts sustainable? Is this ETF going to be able to continue to pay out this much in the future, especially if we see an adverse move, like the volatility index spiking up like crazy? Well, there definitely is some risk there, but of course there's risk with every investment across the markets. And like I said, if you are personally bullish on short VIX exposure, like I am personally, then this ETF might be the right one to look into. Now I promise that at least as of so far, this ETF seems relatively safe because of the performance, even though the strategy is somewhat risky. With ZIVB over the last 1.53 years, that's about how long it's been trading so far, this ETF is actually up if you were to reinvest those distributions 64% or around 38+% per year. Now if you look at that and stack it up next to other popular stocks for ETFs, ZIVB, whether you like it or not, has outperformed a lot of other names across the markets. Now maybe next you might be asking yourself, well, what is an ETF that offers around 49 cents in distributions every single month really meant for? Is this ETF right for you, and who would be the right candidate to buy something like this? Well, for me personally, I look at some of these ultra high yielding ETFs as instruments to raise my overall income that's coming into my portfolio on a monthly basis. And with all the income that comes in, I'm able to buy different shares, different stocks ongoingly, some things that also offer massive yields, but other things that offer a lot more growth potential. But either way, if an ETF like this one continues to pay somewhere around 20 to 25 to 30% yield on a yearly basis, even if it trades sideways or loses a percentage or 5 every single year, an ETF like this will offer a massive total return for investors. Now in theory, this could just be a lucky 1.5 years, and maybe we just haven't seen that much volatility or sustained volatility, which is why ETFs with this sort of strategy have done well so far. But either way, in the max time frame, ZIVB is very, very green, and to be fair, as of right now, it's either trading at somewhat of a discount at around $19.70 per share, or maybe this is the start of a long, strenuous decay. Your guess is of course as good as mine. But either way, I've been grabbing a few shares of ZIVB here and there. Will this ETF ever make up a majority of my portfolio? Absolutely not. Will this ETF even ever make up a small majority of my portfolio? Absolutely not. But is this ETF, at least so far, been paying investors around 48.5 cents for an ETF that has a positive total return and a strategy that I personally can get behind? Well, I would say absolutely. So now that we talked about ticker symbol ZIVB or future ZVOL, the -1x short VIX midterm future strategy ETF, I talked about how this ETF works for the most part. We talked about the performance of this ETF, and I even shared why I personally believe in it. I lastly want to hear from you guys down below. Is an ETF like this one with this sort of strategy something that you would personally look into? Let me know why or why not in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.